What's up everyone, it's Scotty with Money Investing. So in this video, we are going to be talking about Twilio, ticker symbol TWLO. This is also another stock SaaS company that's at the top of my list for a potential long-term investing. And we have talked about this back in May when I was in Malaysia. I remember doing a trade idea on Twilio because it did drop pretty heavily after the earnings were reported. And the stock was, again, rebounded very nicely, 25, 30, 40%. We ended up making some nice profits with that swing trade because the entire move was very, very overblown. And not to mention, it was trading very close to its NLV, which is a net liquidation value. So in this video, we are going to be talking about what the earnings expectations are because, once again, Twilio is reporting their earnings next week. So we're going to take a look at that. We're going to take a look at the fundamentals, talk about the revenue, the earnings, everything, and of course, the fact that they are going to be profitable starting this year. That's very important because Wall Street institutional involvement is going to be there for Twilio starting this year. And that's really, really key for for me personally, right? That's one of my biggest criteria is that I want to invest in companies that are already profitable, that are self-sustaining, that are going to be around for a long time, that are not constantly burning through cash, that don't have negative cash flows, and got, very, very strong, consistent revenue, growth, margins, profitability, and of course, not to mention balance sheet and share buybacks. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. That's the least you can do. That's all I'm asking is you drop a like and of course subscribe and share this video with someone that you think that might be benefiting from this video. And links are going to be down below for our Patreon and for our Discord as well. So this right here is going to be the earnings expectation. Now, again, on a GAAP basis, not profitable yet, so -$4 per share. Normalized non-GAAP basis, 30 cents per share, with revenues coming in at just under $1 billion per share. And again, you can take a look at the overall growth, very, very strong revenue and earnings consistently growing, moving in the right direction. Also, that's moving in the wrong direction is operating income. So every single year generating operating losses because of the substantial increase in R&D expense and SG&A. And that's what we have to really focus on controlling for Twilio, because if the company constantly has to spend so much money to generate that revenue growth, eventually they will never get to profitability, right? Eventually there will always be that higher OPEX, which is operating expense, to generate that revenue and growth, but operating losses will continue to rack up as well. So that is a very, very important metric to focus on. But again, if you take a look at the actual EBITDA, again, negative here, negative EBITDA, we got negative free cash flow, unfortunately, and we got shares outstanding also substantially growing pretty heavily. So Twilio is one of those companies that has a very nice, sound, quality business model, SaaS business, consistently growing the billings, revenue, all those things, but it's not profitable, right? It's again, spending and burning through a lot of money right now to generate that growth. So it's not profitable. So it's not on my sort of long-term list. It is only on my swing trading list, right? It's only one of those stocks that I trade but not invest because of that lack of profitability. This right here are going to be the margins, so 47.5% gross profit margins. Of course, we've got negative all around the board for return on capital, assets, equity, EBITDA, net margins, all those things. And we got cash here sitting at almost $4 billion with little to no debt, $1.2 billion. So they've got a negative net debt, meaning they've got negative $2.7 billion of debt for the company here. So that's one of the reasons why I was so interested in Twilio when it was trading as low as, $6-7 billion back when it was trading at $45-50. It has rallied quite a bit, 57% from those levels, right? So it was pretty much trading at those levels, and it's very close to its net liquidation value, which is one of the reasons why I was so attracted to take that swing trade on Twilio as well. Valuation, again, trading at a little bit over 2.8, 2.7 times sales. Enterprise value to EBITDA, again, trading at over 14. Again, this is on a non-GAAP basis, a non-GAAP P multiple 42, and price to cash flow at over 85. So valuation's high as well, but this right here is really where the growth is coming from. EPS expected to go from $1.43 to $5 to over $9.75, almost $10 per share for the business over the long term. So if you plug in those numbers here into our spreadsheet, what we get is a growth rate of 23 to 29%, right? So that is going to be that growth rate for Twilio over the next 5 to 9 years. And of course, that shares outstanding since 2019 has been a little bit over 12%. So if we plug in some of these numbers for Twilio, where is that fair value going to be? So I'm going to do 12.5%. I'm going to do a higher margin of safety because of the lack of profitability there. 12% discount rate. We're going to go with about 25% growth and 25 times P multiple. We get down to a fair value of $28.65. And right now, obviously, it's trading at $61. So at $41, again, I think it was like 2 times net liquidation value, which again is a very, very solid number to be focusing on. And this right here, $20 would be at net liquidation value, because if you basically sell off down to $28, we're looking at a sell-off of a little bit over 53%, so pretty much being cut in half. And then we'd be coming down to a little bit over, I want to say $5.5 billion, and that net liquidation value came in at around 4.5. So we were actually very, very close to that NLV. So that's going to be a no-brainer level, right, for Twilio. Because see, the thing with net liquidation value, and there's very few stocks that are actually trading at those levels, is because if you take the entire business, right, and you sold it, right, you sold the entire business after paying off all the creditors, all the debt, all the liabilities, the amount that you're left with, that's called a net liquidation value, right? That's your net, meaning after everything's been paid off. Liquidation, meaning you've already liquidated the business. Value, right? Value is the business value. So if the NLV is, let's say for Twilio, closer to $4 billion, and the stock or the company itself is trading at $4 billion, that doesn't make any sense, right? Because the market's not pricing in any potential for Twilio. It's literally trading it at its book value, so to speak, right? After subtracting for all liabilities and debt. So that's why, it's one of the very few stocks that is trading as close to possible as its net liquidation value. Of course, it's still trading at right now it's like 4 to 5 times. But of course, if it does get cut in half, 50%, it'd be trading at 2 times, which again would make a lot of sense from a trading standpoint. Maybe not so much from a long-term investing standpoint, because again, they do still have to achieve profitability because the balance sheet situation can worsen. But again, it starts to become a little bit of a no-brainer. Now, from a technical standpoint, I will point out that it does have a pretty solid bull case for some breakouts here. So this right here is a potential bull flag formation, which could lead to a significant breakout if the earnings come in solid. This right here is going to be that bull flag where we have seen a very strong rally. This is a consolidation sideways, so bull flag here. And of course, if we do see a very nice break to the upside, which is going to basically put us on our way to maybe $79, $80, that's going to be that next target and that resistance to focus on for Twilio. So we've gone rejected there. That would be the next target, that next resistance, $79 to $80. And that's a reasonable upside, right? 29 to 30%. That's reasonable for a potential break to the upside. So this one right here would be that bull flag. And of course, we're watching that support sitting roughly over here. I would say sitting roughly at $60. If you do see a break down below 60, you're out. That's a very low risk, high potential reward opportunity from a swing trading perspective. Of course, from an investing perspective, I'll be looking at it at closer to 40, down to as low as sub 30 from an investment standpoint. But again, it does lack profitability. So that is going to be a big question there from the company as well. So let me know in the comment section down below. What do you think about Twilio? Are you buying, selling, holding? What are your thoughts? I do like it from a swing trading perspective going into the earnings with that bull flag potential breakout here. So we'll be formulating a risk plan or a strategy here. I'll share that in our Discord probably next week, going over what can be done. But hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.